Good afternoon, everyone. You're all very welcome to the US session open here at the Educated Trade. So obviously looking at market bias into obviously 234, the US session open, as we look at markets gauging sentiment, of course, following the job numbers at 130 and the market starting to recover modestly after obviously the DXY and obviously that dollar weakness that we saw on Tuesday following the Powell commentary. So first things first, if we look at the market sentiment for today, we actually have started to see the indices form somewhat of bottoms, particularly with that DXY correction. So that initial impulse of strength that we saw for the Powell testifying on Tuesday, Humphrey Hawkins, and of course, we actually are starting to see that unwind and unravel a little bit. So as we talked about in previous Zooms, price action, it's that continuous battle between buyers and sellers, and the price action isn't always going to be going in a straight line. And we're kind of seeing that now, that even despite central market participants, analysts, institutions forecasting potential for 50 basis points, a lot of that initial impulse that we saw on Tuesday has become eroded as the DXY is starting to move back into that previous range that we've talked about, underneath that 105 handle, 105.50 handle that we've talked about, as I said, for the last number of weeks through the majority of February. Now, of course, with that weaker dollar over the last couple of weeks or so, we're seeing indices over the last couple of days or so, since really yesterday, we're seeing indices starting to find a little bit of a bottom, right? So those bottoms we talked about yesterday around 39.75, 39.50 on S&Ps has held up nicely. Dow Jones between this 32,600, 32,500 level that we talked about is holding up relatively well because of today, of course, even into 130 and even before 130, actually the data and the markets actually started to rally a little bit off of that weaker dollar. So as traders, we're looking at correlation, we're looking at sentiment analysis to seeing which way is the market's favoring. Of course, that's really ultimately important, but at the same time, being able to break the price action down with the fundamentals is obviously ultra important. So for example, at 1:30 today, we can actually see into the US session open and of course into the jobs data at 1:30. Give me a second and I'll open up the economic calendar. We can see how the markets actually bought into 1:30. Let me just bring up the data, 1:30 job numbers. So obviously the better than expected job numbers. And of course the buying at 1 o'clock was actually bought into the job numbers at 1:30, where we saw that catalyst where the price action has come into yesterday's session highs around this 32,900 level. So really today we're seeing those initial moves from 1 o'clock, 1:30 into the jobs numbers, into 2:30 today, into the cash open. Does that become more systemic, right? So we're looking at confirmation and clarification. Does that dollar play continue to weaken? Because of course, if the dollar play continues to weaken, then you're going to get risk aversion. You're going to get risk aversion. You're going to get markets buying into stronger equities, stronger indices. And of course, tomorrow, if we look at the economic calendar, what do we have tomorrow? Our March NFP figures. And of course, that's going to be a very, very important piece of information and data for markets, for traders, for institutions, for everyone broadly speaking, of course, central banks as we approach the next federal meeting the week after next. So I think that's really ultimately very, very important. And of course, today, as I said, we are seeing indices break through or approach yesterday's highs. So obviously in the S&Ps, we've actually surpassed yesterday's session highs at around about 4,000. We're starting to see a little bit of selling or topping out coming into play. Similarly, with the NASDAQ, we've broken through yesterday's session highs. We're starting to see a top coming into play. And of course, in the Dow Jones as well, very, very aggressive move into yesterday's session highs and starting to see a top coming into play. So markets are recovering into yesterday's, obviously into today's open following the 1:30 data, but still a hell of a lot of way to go to undo the heavy selling that we saw on Tuesday, right? So the Dow Jones sold off from 33,400 all the way back down into this region where the price action is now consolidating from. So I think if you're on the sidelines looking at potential entries today, really and truly, you should be looking at these value areas from the Asia session and of course the range where we've traded at this morning, because of course you'll see the majority of the Asia session and European session has traded around this 760s, 770s level in Wall Street. So really you're better off putting in offers away from the market, allowing the market to see, does it get back to these levels, these volume areas, and then making critically more viable opportunities and trades from those levels rather than trying to buy or obviously be looking for the breakout and obviously trying to take out those highs. And I think that's incrementally very, very important, is being patient, being disciplined in your approach, allowing the markets to come to you, and then taking advantage when you have clarity in terms of what you're seeing within the price action. And that is ultimately the most important thing, right? Similarly, again, with the NASDAQ, we've broken out of this range as we've looked at for the last couple of days, but probably won't be surprising if we see us return back into this 12,150, 12,160, this area down here where we broke from at 130. Now, of course, we'll look at the market profiles in a second. Similarly on the S&Ps, right? We've broken through this consolidated range of the last day or so. We've broken out, we've taken the highs. Naturally enough, after we take the highs, the likelihood is the liquidity is going to come back into this region. So that's why this region here between 39.80, 39.75, 85, this 10-point region here will probably become very, very important. And of course, when we look at the market profile in a second, you'll probably see correlation of where the value areas in the market profiles is playing out to where we're actually reading price action from. And as I said, that builds confidences and that builds validations of where we actually want to buy in, where do we want to be putting orders into the markets, and then making sure we've got very clean and determined risk off the back of that. Okay, and that's ultimately the most important thing. Okay, now again, we'll be looking at dollar performance today as we've looked at euro dollar and cable yesterday. We're starting to see a little bit of an uptake in euro dollar, albeit maybe short-term highs here into the open at 105.80. But of course, similar scenario, we're seeing euro dollar at session highs after taking out the range yesterday. So it'll be interesting to see if there's any sort of pullback into this region and then seeing is there a market reaction, right? Similarly on GBP USD, we've had a very, very aggressive move so far from yesterday. Wouldn't be surprising if we actually saw a little bit of a correction short term for the markets then to come back into this region. And that's ultimately the most important thing here, is having clarity within the price action. So without further ado, let's look at the market profiles. Let's bring in the market profiles to give us a clearer understanding of where the volume areas are for the day. Okay. So first of all, if we look at the S&P 500 and looking at market profiles for a second, we can see that's USA 30. So let me just bring up SPX 500 for a second. Okay. We can see here that this area, as I said, between 39.85 and 80 is going to be critically important. So into the open, we've broken through the structural highs, taken the highs at 4,000. The likelihood is you'll probably see a return back into this market profile value area region. And that is also incrementally very, very important because we're looking to see how does the markets react in these regions. Okay, we're not looking to just FOMO in and buy at the next price, available price in the markets and have that dollar urge. We're looking to be disciplined. We're looking to have a clear trading plan. We're looking to have good risk, and we have clear clarity and focus as to where we're buying, why we're buying, and what is the goals of what we're trying to achieve, right? If you know those three things and you can answer those three questions, you'll have a lot more efficiency within your trading. And of course, that will obviously give you a better likelihood of having profitable positions, profitable trades, and obviously a positive P&L. Okay, so you can kind of see there that area there, 39.85, ties explicitly back into the S&P, where it's gone from my screen, but again, very much back into this region. So keep an eye on that region very, very closely. Okay, if we look at the Nasdaq, again, very, very similar scenario. Nasdaq is seeing a very, very clear reaction. Clear buying into 230 e prints, which is the 2 o'clock into 230 print, all the way up at 12,350, and we're seeing the price action starting to profit take and come back into this region. So as we talked about down here, if I open up the Nasdaq chart, we can see that the likelihood is you will not be surprised to see the Nasdaq return back into this region down here. Okay, this region down here where we've been trading in most of the morning time, that will be the logical scenario. And of course, that then leads to price action, bringing back up market profiles, really returning back into this region between, let's say, 12,250, 12,270 on market profiles. So obviously, depending on the exchange you're using, some are priced slightly differently. So if you're trading on IG or you're trading on maybe some of the CFD brokers, continental ones, the pricing is going to be slightly different. So it's all been relative to see in the specific piece of price action that you're looking at, finding your value area is relevant to you. So the structure of the price action, how it's moving should be identical, but your prices may be slightly off. So you're trying to find where are those structures developing and then waiting for the price action to come back to those regions specifically. Okay. Lastly, then, if we look at Dow Jones, of course, into 230 as we approach the open, very, very clear buying coming through following that 1 o'clock impulse, coming into those session opens or those session highs as we talked about yesterday. And of course, if we bring up market profiles as well, just to kind of elaborate on that, okay, USA 30, bringing in the market profiles. And of course, we're seeing that very, very strong buying print up here to 32.9s, right? We're in this 32.900 level. So I suppose then if we do start to see a little bit of profit taking at those session highs, now obviously determining whether that happens or not is going to be the key question. Higher. And therefore, then you're kind of trying to FOMO in or find an entry. So I think it's important to find the opportunities of entry and then make very, very clearly defined decisions back of that. So if you're on the sidelines, you should really be looking at this value area here, down here between 760, 750, 780. And that, of course, ties directly back to POC. So we've had that very, very strong break. Wouldn't be surprised if we took yesterday's highs into the open, top out, let's say between 2:30 and 3 o'clock, and by 3 o'clock be coming back into a test or come back into this value area as well. So keep an eye on the price action. It's important to have a clear understanding of what you're looking for. Is it a short-term trade? Is it a scalp? Is it a more positional trade, maybe through the course of the afternoon? And that really separates kind of your plan, right? You can very easily turn a longer term trade into a shorter term trade if your positions supersede your expectations and you're taking profits quickly, but you can't really turn a scalp into a swing trade. Otherwise, then your whole ethos in terms of how you're reading the price action has strayed somewhere. Okay. So it's really, really important to be clear on that. So really watching the price action. Now I'm currently long Wall Street. I took longs just before kind of back in this value area today, kind of spotting this high and low taking of liquidity this morning. So I'm running it up now. But again, if we start to see profit taken, I'll be looking for a re-entry back into the 760 level or move back into the 760, 780 level, and then evaluating the price action clearly from there. All right. So that's where we are into the open. Obviously, Dow Jones has taken highs. S&P's, structurally speaking, is sitting at session highs from where we've been kind of trading over the last couple of days or so since that aggressive move on Tuesday. Obviously, NASDAQ performed the best of the three compared to each other. Obviously, S&P struggled as well. European indices, I suppose, in the back foot. If we look at FTSE today, interesting plays in the FTSE. Again, came all the way back down to the bottoms of this regions after taking the highs initially last week, finding a little bit of a floor this morning at this 78.50, 78.60 level. And I'm currently running longs from that area myself, personally speaking. So, of course, looking at evaluating the price action, of course, through the afternoon. And then, of course, tomorrow, as we turn to the economic calendar again, we're looking at NFPs tomorrow being one of the heaviest data prints of obviously the calendar month. Now, of course, it's important to look at NFPs in its own right. And of course, evaluating that, you're better off looking at the dollar, right? Because of course, if you go out to the daily timeframes, evaluate or even the 4-hour charts for a second, the largest intraday moves have come both in the January NFP and of course in the February NFP. So of course, wouldn't be surprising if March's NFP was the catalyst tomorrow for the price action to come back into this 104 handle. Now, whether that happens or not, let's obviously wait and see. But we probably expect some sort of reaction tomorrow in the NFPs, given that we've seen a very, very clear reaction in January, a very, very clear reaction in February. And of course, it's something that we've kind of talked about quite a lot in recent weeks is the importance now of the employment data as the economic data becomes extremely important through 2023 in terms of higher interest rates, lower growth, and of course, how is the broader economy generally doing as well. All right. So that's pretty much it, everyone. Have a great day and trade safe this afternoon, and we'll see you all later. All right. Thank you, everyone.